everyone, in this video we're going to go over my weekly portfolio update. I'll show you how my portfolio looks along with any moves that I made. And then we're going to talk about the recent Fed decision regarding big banks and dividends and how that affects my investing strategy. Let's begin. So this is my portfolio. It is a mix of growth stocks, growth value stocks, and dividend stocks. Right now I am participating in the Grow My Portfolio 2020 challenge, where I need to get this portfolio from where it is now to $25,000 by the end of the year, by December the 31st, no matter what happens in the market. Now, just an overview of my normal strategy. Every month, I deposit $1,200 into my money market, and then from there, I deposit $200 into a dividend-paying stock that I own. I try to pick the position that is lowest on this 52-week scale. In addition to that, I am also hoarding any leftover cash I have at the end of the month, so I can take advantage of any deals on any growth stocks. Well, anyways, let's go over the positions and how I feel about some of them. So Bank of America, we are down 5.4%. We're going to talk about this stock later. Cloudera, we are up 91.13%. The stock is finally dropping a little bit. I really want to expand my position, but I need this to drop. Right now, my cost basis is at $6.48. I don't think the stock is ever going to get that low, so I'm going to settle for $9. I just can't buy it while it's approaching all-time highs, even though I really believe in this position. Cisco, we are up 4.29%. Facebook, we are up 30.58%. It did drop a little bit because of the whole ad debacle and a bunch of companies pulling out ads, but I think Mark is meeting with them to discuss to iron things out, which is why the stock rose so much today. Realty, we are up 24.30%. I really want to add to this position, but stock keeps going up and up, so, you know. Pfizer, we are up 1.11%. Qualcomm, we are up 13.26%. Revolve, we are up 14.28%. Sony, we are down 0.5%. AT&T, we are down 0.74%. Earlier this week, I dropped $200 into this position. Tapestry, our newest position, we are down 6.29%. It keeps dropping lower and lower. It's not to the point where I want to expand my shares, but it's getting to it's slowly getting there. If the stock hits 1250 or lower than that, I'm going to add another 30 shares, and that should complete my position there. Uber, we are up 11.48%. That gives me a total equity of $16,241.86, and we are up exactly 9%. So let's go back to Bank of America. About a week or so ago, the Fed put some restrictions on large banks after a stress test that did not go the best. The two main restrictions that we're going to talk about are the Fed is requiring all the large banks to suspend share buybacks. And the more important one to us right now is that they are capping dividend payments at their current level for the third quarter this year. And then they also said that it will only allow dividends to be paid based on a formula tied to a bank's recent earnings. So if a bank is not making enough money, it has to cut their dividends. Even after that, the industry is still going to be under scrutiny by the Fed. So that means the Fed is still going to be watching them very, very closely to see if they might have to cut dividends in the future. Wells Fargo, a bank that had grossly underperformed in the last quarter, is already cutting their dividends. I mean, take a look at this drop-off for their net income from last quarter to this quarter. They are not doing well. So for them to cut their dividends, that is very much expected. I think pretty much everyone knew what was going to happen. Bank of America, which is a company that I'm invested in, they said they're going to hold their dividend for now, which is good. That means they're not going to cut their dividends. Based on this stuff, it looks like they should be able to hold their dividends, but who knows? Take a look at their financials. They did drop off, but they are doing much, much better than Wells Fargo did. So it's looking like they should be able to hold their dividend, although, I mean, their stock did drop dramatically as expected. So according to what I read, Bank of America looks fine now, but will they cut their dividends in the future, like fourth quarter or next year or beyond? Well, I watched Joseph Carson's recent video, and he thinks that it's going to happen. Now, is that what's going to happen or not? Who knows? But one thing we do know is that banks are under a lot of scrutiny now and will continue to be, and for a good reason. The Fed cut interest rates by a lot, several times, so banks are not earning as much money as they could. Not only that, but they have a lot of adverse economic conditions that are coming up. We have a lot of unemployed people right now. There are a lot of households and small businesses that are going to default on their loans. I mean, banks have a lot on their plate right now. I have to consider the fact that it might happen. That the Fed might force Bank of America to cut its dividend. I mean, I have to consider the fact that it's possible. So, what are my plans if it does? Now, when Nordstrom cut its dividends, I think several months ago, I mean, I dropped them. I sold out because, the reason why I had invested in Nordstrom had changed. But what about Bank of America? Well, I think Bank of America is a lot more financially well off than Nordstrom. And I think that Bank of America will, unlike Nordstrom, start up its dividends as soon as the Fed allows them to again. So this is my plan as of right now. If I'm going to keep investing in Bank of America as normal through my regular dividend process. If Bank of America is forced to cut dividends or it decides to cut dividends, I imagine the share price will drop significantly. At that point, I will buy a large chunk of shares. I don't know how much a large chunk is going to be, but it'll be at least $800 to $1,000 worth of shares. I'm going to buy that amount and then I'm going to hold on to it. So I would be losing dividends for the short term. However, like I said, I expect Bank of America to resume dividends as soon as they're able to. And once that happens, I feel the stock price will go back up. So I will make out on capital gains and a lot more dividends at a much cheaper price. I mean, I'm not making a whole lot of dividends from them right now, so I see it as sacrificing short-term gains for a long-term profit. So in other words, I'm taking a chance. I think it's a well-informed chance, but it is a chance nonetheless. So I'm going to have some faith in Bank of America. So anyways, those are my plans. What do you think? Am I doing the right thing? Do you think I should sell Bank of America if they cut dividends? Do you think I should hold on, buy more? What is your strategy, and what is your strategy involving banks? If you think I should go about this a different way, please leave your thesis in the comments. Thank you for watching, and eat your vegetables.